If you're into DeFi, you would have come across 𝗕𝗂. 𝗕𝗂 is a project that has some immense potential, and there's a lot of speculation out there as to how high the price may go. In today's video, I'm going to be sharing my 𝗕𝗂 price prediction for 2025. I'll be jumping into the charts, sharing my thoughts and opinions as to where I think the potential lies. As I get into today's video, if you do find it useful and informative, smash that like button. If you are new to the channel, subscribe, and let's go ahead and check out what's going on with 𝗕𝗂. Okay, so in order for us to kind of check out where we think the price potential is going to go, we are of course going to have to take a look at some data in the charts. So here we have 𝗕𝗂 paired up with USDT. We're using the 1-day 𝗕𝗘𝗪𝗧𝗧 chart. We're using 𝗕𝗘𝗪𝗧𝗧 because it has a pretty substantial amount of history going all the way back to October 2020. Now, in order for us to be predictive over the future, we also need to understand the history. We need to know where 𝗕𝗂 came from and where its price potential has been, where the price has been in order to understand where the potential goes. For this, we are going to use a couple of tools. We're going to use Fibonacci retracement tools. Okay, this is built into TradingView. Okay, these are the settings that I am using, so you can pause the video and take a look at these if you want. I use my charts on logarithmic, so my Fibonacci is also on log scale. It's very important that you tick this box if you are using a log scale. For example, if I go ahead and turn logarithmic off, you can see what it looks like with it on, with it off, with it on, with it off, right? On makes things a little bit easier, specifically with higher volatile assets. If there are like stock market plays, forex plays where there's low volatility, you don't need to worry about logarithmic. But if you are using some trying to analyze cryptocurrency and crypto markets where there's high volatility, it's much easier to use it in logarithmic. So obviously my fib levels and my chart is of course in log scale, so I make sure my fib is in log scale. Okay, that's not on by default, guys, so you have to manually do that. The other tool that we're going to use is Elliott Wave. Elliott Wave is an insanely predictive tool and price action analysis tool, I should say, that is a little bit complicated. Many people get it wrong because they don't apply the rules as they are. Like I say, it's complicated, but I understand it, so I use it, and it kind of really helps understand the psychology of the markets. For those who don't know, Elliott Wave tracks the psychology of the herd, essentially the behaviors of the buyers and the sellers. And when you track their behavior, you can predict what they're going to do next. Okay, so we're going to use a combination of the Fibonacci retracement tool, which again is based on psychology, and we're going to use Elliott Wave, which is based on psychology of the buyers and the sellers, which essentially is the supply and the demand, right? It's important that you understand supply-demand metrics because that is what moves the market. What doesn't move the market is market cap. Market cap is dependent on price action, and price action is driven from supply and demand. So we track supply-demand and we use the psychology tools to do it. Okay, now caveat. Elliott Wave is an insanely complicated tool or complicated concept. I have put together a course. It is over at 𝗕𝗘𝗪𝗏𝗀𝒀𝒀𝒀𝒀𝒀𝒀𝒀𝒀𝒀𝒀𝒀𝒀𝒀𝒀𝒀𝒀𝒀😅 for anyone who wants to understand more about it. Go ahead, check it out. Links are in the description. I often run discounts as well, so join us in our Discord server, linked in the description, or check the description down below to see if there's any discounts running at the moment. So 𝗕𝗂 is a really, really cool project. If you haven't caught up with it or looked at it from a fundamental standpoint, you definitely should do so. It's got some really strong tokenomics as well, so the price action's going to do well, in my opinion. Now, taking a look at what we've got going on here, there's some really cool stuff, right? So I can see just by looking at this price action, there's nothing else on here except for some EMAs and SMAs, right? Which we can argue we can turn off because they're not that important toward these kind of videos. But you can see that we had initial peaks up here. Okay, so that peak coming in, let me zoom in and make sure I get the exact wick, which is off by 1 day. There we go, of $665, okay, and 88 cents. That was our all-time high. Now our lows on the chart are not really right because I know that there's actually lower lows here. So I'm just going to go ahead and snap in a line just somewhere down there. It doesn't really matter what that low is. It's a little unfortunate we don't have more data, but I know that that's not the existing low. We could, of course, check out CoinMarketCap, try to find out the exact point where it was low and all that kind of stuff. And maybe I should have done that for the video. So what I'll do is I'll probably just pause the video right there and go and get that number. Okay, so it turns out that actually that is the low down there. So that's not too bad. So the low, of course, being the 5th of well, yeah, actually, no, it's going to be down here somewhere. So I'm going to snap it to that low point. It's actually an interesting kind of reference point, so we'll keep it there. So cool. Okay, so that's the low point for our chart. We obviously have the high point on the chart at 665 as well. Okay, why is all this important? Well, it's really important to understand the structure that formed here and that took us into the all-time high. And it's also very important to understand the nature of how we corrected down in that bearish market, of which I'm going to go ahead and snap a line right inside here as well at 45.64, which shows the accumulative range where they kind of bottomed out a little bit. Okay, and I say bottomed out a little bit because we're bouncing around down here. That was June 2022. Okay, so we have kind of 3 points of reference at the moment on the chart. We have the low point coming in at the kind of point of origin. We have the all-time high and we have the existing bear market low point. Okay, and since we've kind of bottomed out here, AVE's kind of just been bouncing around a little bit, kind of inside a tight range. And I'm going to go ahead and draw in a bit of a yellow box on that, show you kind of where it was bound and where it broke out. Okay, so you can see in here this range between 45.64 and 115.73. Okay, now what's the importance here? Well, the importance is that a lot of people could see that the market was bearish. It was bearish because we were in this kind of move to the downside, this kind of idea of a channel coming here and kind of progressing downwards. Now, what's really interesting, of course, is you can take a look at this without any of these kind of big kind of technical indicators and say, look, we had a move to the downside, okay, down here. We rallied up, we moved down, we rallied back up, and then you created a lot of overlap in this price action. You can kind of see this overlap happening over and over and over again. Okay, and it shows that there's not a huge appetite, and you can see it just kind of repeats itself over and over and over. What I mean is there's not a huge appetite for just mass selling. It's not impulsive, and it's not kind of a trend to the downside, okay? And the importance of that is when you see mass movements or psychology-based movements like this, where we see there's not a lot of overlap and it's basically straight moves to the upside or to the downside, that is what is defined as a trend. So we had a trend to the upside, but we did not have a trend to the downside. And these are important notes because that helps us understand when the market is when it's bullish, and it helps us understand when the market is when it's bearish. Okay, at the moment this market is ready for bullish times, not bearish times. Although it's taken quite some time to get to where it is today, you can see here that this is what is due to come. Okay, so 2025 should be more like what we saw back in 2021, and the reason for that is the psychology that led into it. Okay, so the overlapping nature of these candlesticks show us with a W, X, Y, X, and Z pattern. Okay, and that is known as a triple zigzag. Okay, so let me get some empty space here. A zigzag pattern is an ABC. Inside the ABC, you have 5 wave movements that are little mini trends. Okay, these are on the smaller time frames. Okay, so you can see you have what is a 5 wave movement. Okay, let me grab hold of that and move it out of the way. You have 5 waves up. Usually it's married up by 3 waves down. So I'll just go ahead and draw a little WXY just for the argument's sake here. So we have 5 waves up, 3 waves down, 5 waves up, and that essentially is an ABC structure like this. Okay, so you can, on the macro scale, we can just call it ABC. Okay, now inside a WXYXZ, WXYX and Z, you have 3 of those zigzag patterns. Okay, so you have your ABC there, you have your ABC here, and you have your ABC there. Okay, now a triple zigzag is the maximum number of zigzags, right? So you straight away can note that this is going to be a low because what you have here is a zigzag pattern there, correction to the upside, a zigzag pattern here, correction to the upside, and a zigzag pattern here. Okay, that last one was actually really aggressive, but it is what it is. At the end of the day, you look for the zigzag and you find the zigzag. Okay, so you have a very corrective pattern to the downside. Then we get into this really choppy market, really undecided. It doesn't know what to do next. There's no major trends going on here, but it is kind of working its way gradually towards something. And that's really the opportunity of what potentially is going to happen next. Again, you can see more zigzag patterns coming in here. This one being a double zigzag, which is just WXY, WXY right inside there. Here you can see a more impulsive break, and that's the one that's really caught my attention at the minute, because in here you have a more defined move on, and that one is where it leads us into the next move. Now, as I said, and anyone who's kind of been paying attention will know what I said about zigzag patterns, right? Zigzag patterns contain 5 wave movements, and well, we can see we have a 1, 2, 3, 4, 5, right? Correction down, WXYXZ, meaning that we're looking for the next 5 wave break to the upside. Okay, So basically what I'm suggesting is that we have a giant A, B, C structure playing out, meaning potentially a new all-time high for 𝗕𝗂. Okay, so let's go ahead and analyze what's going on down here. I'm going to clear out a lot of this noise because it's going to clutter up the charts way too much. I'm just going to remove it all off, but hopefully that bit makes sense, okay, because it's an important distinction understanding where we currently sit. Now, taking a look at the formations here, this also looks very interesting in the way that it runs in what would, to me, would appear to be a actually, yeah, I'd say it's going to be a expanding diagonal in there. So again, we're talking complex structures, but for the most part, you can see 1.618 and then a diagonal at the end. And then, of course, you get into this move here. Also, very interesting kind of structures appearing in these diagonal structures, really impulsive breaks, correcting, moving back up into the ending diagonal. And the diagonals are noted, guys, by the overlapping nature of these candlesticks, okay, in the fifth wave movement or a wave one movement. They're the only two places that they can appear. Okay, so looking at it, it's looking really, really quite nice and tidy. So inside here, we would have a wave 1, 2, and I would say this here is going to be your 3, that's your 4, and that's your 5. And actually, I would say it's actually probably there, and that is diagonal included in that wave 3. And so the importance of that is then you move down, and then you have this next break to the upside. This break to the upside is also tracking more diagonal based structures, and the whole entire thing to me looks like a diagonal structure, which is really quite interesting. So let me break that down into kind of the concept here is we are nesting on this daily time frame, and it's really quite an intricate little process here, and it can be a little bit complicated. As you can kind of see, 1.618 was hit here, and then we're looking for this to be your kind of final kind of hurrah, which I don't think is necessarily finished just yet. Maybe it is, but I don't think it is, because we've got a 3-wave correction pushing up, and then we'll look for a bit more of a pull to the downside before we kind of get into that final kind of run. Now, on this kind of macro scale, because we're not ignoring this little move from the bear market low point either, over to our existing low over here, we're going to have to target 211 for us to then start to see a bit of a correction. Okay, the importance of that, of course, is 1, 2, 3, 4, 5 in a diagonal pattern, and then we're going to be talking about bigger runs to the upside. The importance of that, of course, is on the zoomed out view here, that this is just a precursor to what is to happen next. Okay, so we're not talking about this being kind of your straight up run. I think that happens afterwards. And if I go ahead and bring in the measurements here for 𝗕𝗂 from our lows to our highs, and I'm going to make sure I get that on the correct wick. There we go. Okay, this over to our wick low over here, which we'll zoom in and make sure that I pull that onto the correct level, which would be right here at the 45.64, so 45, and I'm going to get it as close as I can, but not take up too much of your time. So here we can see this run to the upside that we are going to be, in fact, I've already got it on there, haven't I? So I'll go ahead and remove that off. We can see here that we are going to be looking for this next run to the upside. This next run to the upside is going to be looking for this range, okay? And the reason for that is, of course, is the A, B, and C structure. Now, the thing that could really change would be if there is a complete kind of run on DeFi, typically, that could see this kind of 1.618 target get here. And we are potentially seeing that in the making, right? 1, 2, 3, 4, 5 could potentially be the making of a bigger run. Alternatively, we have an overextension in a fifth wave. We just hit the minimum expectations and we're done, which is also a possible scenario. But for now, I want to kind of say that our price predictions based on all of these internal structures that we are seeing are leading us out to new all-time highs, targeting 1,185 to 2,049. Now, from our lows, that would essentially be putting us at around 2,500% for the low side and around 5,500% for the higher side expectations. Obviously, from today's prices at the point of recording, that's very different. We're talking about 650 upwards towards about 1,500, something to that effect. If we go for the 1.618 and the market really does boom for DeFi again, and we start to see 𝗕𝗂 really kind of capitalizing in on market share, like I say, the tokenomics are supporting that, then we could see a very, very explosive move similar to what we saw in 2021. But taking a look at this, there's going to be some interesting areas of resistance around $350 and $500 to $600 ranges. But for the most part, yeah, it's looking promising, I think, with everything that's going on here with the buying and selling structures that we see here are supporting more bullish environments than bearish environments. I think in 2025, we're going to see a bit of a boom to the upside. And, well, 1185 would be a pretty nice target to be aiming for when it comes to 𝗕𝗊. Of course, this is just my thoughts and opinions on the data in the charts as I see it. You guys can let me know what you think down in the comments below, or join us in our free Discord server and we can continue the conversations down there. If you found this video helpful, then go ahead and smash that like button. If you're new, subscribe, and if you haven't done so already, check this video out right here. It's not one that you want to miss.